Deepika on stage, please. Mr. Rangaswamy on stage, please. 2 minutes. Huh? That's okay. No, a little later. Just a vote of thanks and introduction, our profile, our stage. Our stage nee profile. I introduce our 2 minutes. Thank you members. Thanks for coming in, even though on a Wednesday evening or Thursday evening. It's a pleasure to host this event, and it's a new topic. And coming from IA Madras chapter, where I have Ranga sir and I have Deepika on stage, and I have some BOG members. It's been a good year, starting from July or August, and then the new president coming in the next year, next 1 month or so. And there are a lot of events we've done through the year. I think some of you would have attended the national conference also. And then there have been sequence of events. We did one event last month, which was on ChatGPT, and then there was a women's conference. And the highlight was the students' conference. So we've done a students' empanelment now through the community. We're going back into the colleges. We've done a lot of work with the Tamil Nadu government on the skills development. We did a recruitment drive 2 days ago. It was well attended. There was some publication also on that. So we're doing a lot back to the community through the IA chapter, and thanks again for all the support, the BOG members and also the members. And that's a small introduction what we do. And then over the period of year, we've done a lot of programs, and most of them, or all of them from August, are on video, on the things on the IA Madras chapter. Pretty active on some of the events. So we're making it more live events. We thought of bringing in back the members, even though it's a bit of an evening session, starting slightly six is slightly early, but I thought maybe we should do it, and we'll have 1 or 2 more events, and we'll continue doing more physical events than Zoom events, because we thought we'd be. So thanks once again. I'll leave it to Ranga sir, and Deepika's on stage for the introduction. Ranga sir.
Good evening to all the participants of this session. It's indeed a great feeling to have such a crowd for PDMs. And as Ravi sir was mentioning, it's to be a continuous learning process. And PDM is one of the steps for achieving that. So again, I have been in IA for 5 to 6 years. And it is heartening to know that the attendance for these PDMs is always on the increase. It's not that people have stopped attending. On the contrary, people are starting to attend on a regular basis, and I can also see many regular faces. And my only request is, please continue to do so. Attend the PDMs, attend all the events, seminars organized by IA. And of course, for the student members over here, it is imperative that you focus on exams and clear them ASAP. And with that, I hand over the mic to Deepika to make an introduction of this.
Yeah. Thank you, sir. Thank you very much. I have immense pleasure in inviting Mr.Sivananda Molleti for as a resource person today for our session on Audit Trail. So, Mr. Sivanandan is from Audit and Assurance Director in Deloitte. He has more than 15 years of experience in assurance services. He has worked extensively in setting up captive shared services setup in Chennai for Deloitte. He works on statutory audit, advisory engagements of large construction, automobile, manufacturing and IT companies. He specializes in statutory audits. He has also handled various assignments, including internal audit, compliance audits, IFRS, US GAAP assignments, etc. He is an associate member of Institute of Chartered Accountants of India. He is also a certified information system auditor. He also holds a Master of Commerce degree from Madurai Kamaraj University. Very happy to have you among us today, sir. Thank you very much for joining. With no further delay, I am handing over the session to him for the Audit Trail. Yes, sir. You have a okay. Okay, sir.
Thank you so much, Ravi sir. Thank you so much, Ranga sir, and then Deepika for the introduction. You are able to hear me, right? Yeah. Good evening, everyone. So again, I think they have already introduced myself. So I've been with audit for last more than 16, 17 years. I'm with Deloitte. I started my career in Deloitte way back in 2006. I did internal audits, I did statutory audits, I did, due diligences and then other things. It is a great pleasure for having here and then taking this session. So today we are going to talk about Audit Trail and then its compliances. And then I just wanted to check with you in case if I'm going little fast, please, take your questions. Anything is there, please stop me and then take pause and then whatever questions, clarifications are there, please ask me so that whatever I could able to clarify, will clarify. So it is again an interactive session. So whatever I think collectively, since it is applicable from 1/4/2023, it is important that we discuss this upfront so that the implications, the consequences of these provisions will come to know earlier. So to start with this, to give a big some context about this topic. It was started in 24th March 2021 when MC has notified that there are certain specific matters which an auditor is required to be commented under 143(3)(j) as per Rule 11G. So when it was started, then everybody has started asking it is applicable for 1/4/2021 suddenly, and then there's a notification came from on 24th March 2021. Then everyone started asking, what is this provision? How do we do that? Because it's just started the provision and then they said it is required to be introduced from 1/4/2021. So everybody has started asking suddenly if you have to make this audit trail compliant, it will be very difficult because suddenly nobody is expected this provision that point of time and then that year. So it was little shocking for everyone to see this notification, be it be industry, be it be from an audit fraternity. It was so difficult for them to digest, and then everyone has went and then represented to the various through various forums they have represented MCA, and then MCA has deferred this by 1 year, that is 1/4/2022 to 1/4/2021 to 22 it was deferred. Again in 2022 there is a representation when still I think many of the people have not ready to gear up and then see whether this is required to be complied, how it will be required to be complied. All those, so many questions have come. So then based on various forums, recommendations and all, again it was deferred to 1/4/2023. So it was deferred twice as far as these provisions are concerned. So there are a lot of things as auditors before, the auditors required to be commented, the industry, then the management should be ready to take up this, this responsibility. So there are a lot of deliberations happened, how we have to comply, which are all the applications that need to be taken into consideration, which are all the transactions that need to be considered. So these things have taken a lot of time. Even today there are a lot of clarifications, there are doubts in everybody's mind saying that how do we comply these provisions. So on sometime in the month of March 2023, the institute has come out with an implementation guide on this compliance of audit trail. So that gives at least some clarity about what needs to be done, how needs to be done. Some of the content which I'm going to cover in next few minutes, hours, it will be based on the implementation guide and then various other guidances available. So, we will discuss about some of these provisions. So if you just, go back and then see whether this is something which is internationally, whether it is there and then it is only applicable only in India. So there is no international guidance available. There is no compliance requirement internationally relating to these things. So why only in India? Because of the various regulatory inspections, the way I think the regulator is looking into so many other things. They believe that this is the right time for them to have some oversight on these kind of matters. So they felt that this is really required and then important to have in India. So that is the overall context and then background for this audit trail compliance. So it is applicable and then the framework regulation is applicable in India. Maybe we set the right benchmark for others to follow. So it used to be other way around. So where we follow other countries, but here this is the place where we are now following first time. So with this context, what we are going to cover in the next few minutes is the overview, and then the contents of implementation guide, and then the contents and then coverage. Next, the key definition terms, because unless we understood the definitions and then the terms of the audit trail, so it will be very difficult. Then the management responsibility, of course, when auditors are required to comment, the first thing is the management responsibility, and then the indicative audit procedures, and then the benefits of audit trail, and then the expected challenges from the industry perspective, what kind of challenges we have, and then the expected reporting scenarios from an audit perspective in case if XYZ doesn't happen, how the auditor has required to report on all these matters. Then FAQs. Some of the FAQs, I'm sure, I think many of you during the discussion will also come back on some of the FAQs. And then the template. So there is a model template which has been given in the implementation guide. I've just summarized here for the easy reference purpose. So overview, in terms of overview, this provision is applicable from 1/4/2023 after 2 deferments, and then it is mandatory for companies to maintain an audit trail throughout the year for the transactions impacting books of account. So again, it was deferred twice. So when we say that it is mandatory, the question will come that it is mandatory for all companies, whether it is any specific companies which is exempted, whether foreign companies is getting covered, subsidiaries are required to be covered, and then associates. It is very clear, and then now it is clarified in the implementation guide itself that it is mandatory for all companies which are required to be, complied by this provision. There is no scoping exemption, including foreign companies are required to comply this provision. So in case of consolidation, the respective subsidiaries, auditors, and then those basis, the reports of the subsidiaries, auditors, and then the joint ventures, and then associates, this provision is required to be commented by the principal auditor. So as far as this, there are 4 aspects in that notification, if I have to say so. So the notification when it was given, so one is that the company has used such accounting software for maintaining books of account which has a feature of recording audit trail, that is edit log. The audit trail is nothing but an edit log, which for the same has been operated throughout the year. Unlike internal control opinion, where we used to comment as on our statutory auditor, we used to comment the controls operating as on a particular point of time, that is as at the year end. Here it is throughout the year. So what if in case if few days, few months, if the audit log is not maintained, how it has to be reported, we will be discussing in the subsequent slides. But it is required to be commented throughout the year, and then such accounting software, again we will go through the software, what is the definition of an accounting software, and then for all transactions, and then audit trail feature has not been tampered with. Again they mentioned saying that this is not something which is, in case if someone has gone and then has tampered some of these audit logs, as an auditors, we are required to go and then comment whether any tampering, any modification happened to those things, and that is also required to be commented. The 4th one is it is preserved by the company over the retention period, which is as per the Companies Act. So there are 4 aspects which has been specifically the auditors are required to be commented. First one is the the accounting software, giving comprehensively all the required transactions, and then whether that is been maintained throughout the year, and then whether it has been tampered, the audit trail has been tampered or not. And then the 4th one is it's preserved in accordance with the retention of the laws of the land. So as per the Companies Act, the current laws, it is required to be maintained throughout 8 years. That is what we will be discussing. The next one is the proviso to Rule 3.1. This is what it clearly says. The audit trail to capture history, including the who has done, what has been done, and when, for relevant transactions impacting the books of account. Again, the books of account definition is a wider. Again, there is a lot of debates, discussions happening. What is books of account? While the books of account definition given in the Companies Act clearly specifies under section 213 what is books of account. Again, there are debates happening in terms of whether the transactions underlying the books of accounts will also be construed as books of accounts or not. There is a further guidance which we are expecting from the regulator or the institute, which confirms clearly that whether some of the operational related things, whether it is required to be covered or not, we will be discussing those aspects when we discuss the definitions of that. And then it is the responsibility of the management to ensure its operating effectiveness throughout the year. That is a general presumption. It is also applicable here as well. Again, there is a definition of accounting software. So we will discuss that. What were the underlying objectives of Audit Trail? So reduced fraudulent activities. While we are seeing that there are so many activities, complex transactions happening, there are regulatory actions against some of the companies which we are seeing in the recent past, saying that X is not complied, Y is not complied, and then there are ED coming into picture. They were not able to trace certain transactions. They are unable to form where from the funds are moving. So there are a lot of money laundering activities. Scenarios are changing. So they believe that this is the right time where they have to introduce some of these things so that the audit trail can be established for seeing that what changes when it has happened. So it is primarily the underlying objective is to see how it can reduce the fraudulent activities, which some of the things which is we are seeing in the public domain, how it is happening and all. So by seeing some of these logs, at least we can establish what kind of changes are happening to the transaction from the source to the final what is happening. So then the everything can be traced from the source, and then what changes have been made, it can be clearly make out. The next one is the increased transparency and accountability. Of course, by introducing this audit trail, the transparency and then the accountability of each and every person who made the changes, who is authorized to make the changes, is indeed the right person who is making the changes, we can able to establish this through this process. And it is increased comfort for auditors. Obviously, when we are going and then when we are doing the audits, you are seeing some of the accounting software. If suppose if you are I'm just giving an example, some of the software, you can go back in time and then you can change the entry. Obviously, the comfort level will come down, right? So you will not know what kind of entry has been initially been recorded, subsequently it got changed. For example, we used to do when earlier the tally doesn't have the feature of going back and then tracking what entry originally passed. There is a provision to delete some of the transactions. When some of the transactions have been deleted or modified, when you don't have that trail and then the underlying comfort, obviously auditors will not know what kind of source from which this has been happening. So that certainly, I think through this provision, the comfort of auditors will increase, be it be internal audit, be it be statutory auditor, and then how this can be implemented. The last one is the strengthened control framework. Obviously, through all these things, if you have a proper mechanism of who is doing changes, what has been done, when has been done, it gives a lot of comfort to the overall control framework itself. So that gives the confidence to the system, and then the overall ecosystem of the controls can be efficiently being managed. So these are the broad underlying objectives through which these provisions have been incorporated. So the implementation guide on reporting under Rule G covers some of the aspects. It covers the definitions, be it be audit trail, accounting software, the SaaS. Some of the definitions we are not covering here, but these are all general. Whether the books of accounts maintained by the third-party service providers, the vendors, such as the Zoho books or any other SaaS-based books of accounts, whether those will be covered or not. So again, just to clarify, the implementation guide clearly says that those things are also required to be covered. So it is not that the the primary books of account, if in case if it is an outsourced activity, the third party vendor is maintaining some of the accounting records. Even those companies also are bound by these compliances, and then they need to give the required logs, and then we need to comment on that. Of course, the management responsibilities, and then the auditor's responsibilities, and then the illustrative wordings for reporting, and then special considerations in the case of extreme situations like fraud and other things. So we will be seeing some of these things. So the maintenance of the books of account under the Companies Act has been prescribed under 128(1) of the Companies Act, where the maintenance of books of accounts in the electronic form has been defined, and then the related rules maintained in electronic should always be accessible in India. By March 2023, I mean, I'm sure everyone knows that the backups of the relevant things need to be maintained in India. Wherever it has been, servers have been located outside India, the daily backups need to be taken, and then it has to be preserved in India. So that any regulator, when they come for inspections, it is required to be, I mean, they want that accessibility should be there, whether the server is incorporated, server is situated in India and outside India, the relevant things need to be here. And then the green ones are the responsibility of the management. The gray ones are the responsibility of the auditors. So we will be commenting under 143(3). So in that, the specifically Rule 11 specifically prescribes the auditors to comment on Rule 11. In that, this specific clause is Rule 11G. So this is 1/4/2023 onwards. The management should identify the relevant applications, the relevant records and transactions. Again, the question is that what is relevant application? Is it what kind of the main accounting software or the subsystems, standalone subsystems? There are a lot of, again, discussions, debates. Anything and everything which is coming and then connected with the financial transactions, that is required to be incorporated. Again, when we go through the accounting software, the definition, and then the books definition, we'll come to know what kind of scope and coverage it has. While it mentioned that it is accounting software, just to give an example, so let's say you have a standalone system for the purpose of maintenance of accounts, and then there are other systems, let's say for sales, purchases, whether those underlying systems are required to also be scoped in. The answer is yes. They specifically mentioned saying that it is not that accounting software. Suppose assuming that you have a standalone system for processing sales, purchases, and then production records. So what if those things are consolidated entries have been recorded in the financial systems? Then the implementation guidance clearly clarifies the objective of this entire thing is just again to trace back to the original source. So through that process, the original, anything and everything which is connected to the financial statements and then the books of account, the accounting things that need to be relevantly to be scoped in as part of this process. So we have to clearly, identify which are all the things which have been scoped out, why those things have been scoped out. Otherwise, no, there's a lot of judgment involved, and then in case if there are some required applications which are required to be scoped in, because at the end of the year, again, there should not be any confusion about what the management believes is required to be scoped in and what the auditors believe is required to be scoped in. There should not be any difference of opinion. So that way, I think the early discussion with the auditors and then the respective stakeholders. So it is important that we should have that buy-in upfront so that there will not be any confusion at a later point of time. So once I think at the end of March 2023, as an auditor, if I believe that it is required to be scoped in, what if the management believes that it is not required to be scoped in? Then there will be any question of dilemma. So being the first year, it is important that the early discussion with the respective auditors, taking certain discussions early and then get a buy-in is very, very critical as part of this process. Again, the relevant records, identify the relevant records and transactions. So someone can just challenge saying that, okay, I will just maintain the underlying the purchases and then sales, what if purchase requisitions and then sales requisitions are the sales orders, and then if you go on to the next level of detail, whether those things are required to be maintained or not. Again, the question is that it is an element of judgment is involved. Wherever that is linked to a financial related transaction which is flowing seamlessly or otherwise to the linked to the financial transaction which has been recorded in the books of accounts, that is required to be incorporated. Some of the people, they have a view saying that, no, what if I have, let's say, I think I have a purchase requisition. That purchase requisition is the requirement from a process point of view. I don't know, why should I maintain the record? Well, let's say, assuming that earlier my requirement is 10, I modified this to 15 or the 20 based on operational related requirement. So why should that be tracked and then maintained? Because the reason why they were debating is that it requires a lot of effort in terms of tracking each and everything. So there are a lot of debates happening. In case if this purchase requisition has modified with then that has been linked to a PO. PO has been again translated in invoice. Everything is linked. So there are discussions, deliberations happening on this. The institute, there are some forums where they went and then they've represented some of these matters. That much clarity is again they were expecting any time from the either MCA or from the institute, because they are representing, and then there is some clarity required to be coming for that purpose. But otherwise, at this point of time, anything and everything which is linked to recording of transactions in the financial statements and then books of accounts, that is required to be covered. So that is the position at this point of time it has been taken. The configure audit trail feature and ensure operating effectiveness throughout the year. Again, if you have an audit trail feature where it can be disabled and then again enabled, they were again saying that there is a lot of debate on that, and then we need to be extremely careful about what is that we need to go and how that modification or the audit trail enablement disablement feature is being accessed by XYZ persons who has that super user access to go through some of these things. I think that is required to be monitored carefully. Again, report exceptions and periodic monitoring is the management responsibility. Restrict access and then take periodic backup. So all these audit trails, it's not that should be available to all and sundry. So only specified people should have an access. There should be a policy document clearly articulating who should have the access to these audit logs. Tomorrow, any tampering happen to those, the management should have appropriate policy procedure to go and then challenge those changes and then modifications, retrieval, all those things. So that way, I think it should be very clearly articulated upfront through a policy document as to who is accessible to what type of documents and then logs, so that it is clear that who is accessible and then how these things have been accessed. And then again, we discussed this should be this record should be maintained for 8 years. That is the prescribed law as per the Companies Act 2013. Then the section 28 provisions relating to keeping, maintaining and inspecting the books of accounts by the management. 143.3 again the rights and duties of the auditors along with the standards to be followed. See, the applicability is mentioned, it is all companies including section 8. There is a specific clarification which has been given that limited liability partnerships are out of this, societies are out of this. So all those things specifically they have clearly mentioned. It is not required to be complied by those companies alone. Otherwise, section 8 companies, foreign companies, and then any companies incorporated in India required to be complied. And then one question again which has come up is that what if all the records have been maintained manually? So is it required to be complied? Again, they have clarified saying that it is not required to be complied. So to that extent, they have given some relief. So I don't know whether people will go back and then make it manual so that they will not maintain all these records. So, but that is the clarification they have given, because under this rule specifically they have mentioned it is whoever is maintaining through the electronic record, only those companies which are required to be complied these provisions. So some of the key definitions, the audit trail and then log. So while we have discussed broadly, It's a visible trail of evidence enabling one to trace information contained in statements and reports back to the original input source. Again, it's a chronological events of changes that have been made to the data. Any change to the data, including creating new data, updating or deleting data, must be recorded. So there is one question which has come up is, what if the customer master, one new customer has been created? Will you consider this to be a change, or will it be considered to be as a transaction? So there will be masters. Obviously, this is not considered to be a change to the existing thing, but it is certainly considered to be a transaction which will be falling into that. So any transaction which has been created to the customer master, vendor master, any master details that need to be again specifically been tracked, and then who has made it. If something, what if some bank account details of a vendor or a customer has subsequently been modified? So again, they mentioned clearly saying that it is required to be tracked. It has its own complications and then consequences. So the implications. So you have to be careful about what is scoped in, because it requires a lot of judgment also involved, because somebody can argue saying that no, that has nothing to do with the financial statements. Again, when we'll go through the books of account and then relevant book and paper definition given under the Companies Act, we'll come to know what those things. Again, it will include the changes made, the date and timestamp, and then who made the change, and then what data was changed. Often we see some of the entries which has been recorded by X person on behalf of Y person. I don't know how many of you have noted, when we do the statutory audit, suppose if I am just sales guy, a sales entry has been recorded by an IT person. So we used to get a doubt, why is that IT person is recording a sales entry? Is there anything which is unusual? Why is that an IT person is saying? There may be a situation where there will be some challenges while data has been interfaced from subsystem to the main system. So that point of time, when they raise a ticket and then it is validly being pushed by the IT guy from back end, this transaction from subledger to main ledger. So then will it be construed as IT guy passed a sales entry, and then will that be construed? So it is important that those things need to be properly been tracked. Otherwise, no, somebody should not say that IT person, why is that he passed an entry for sales? So there, unless and until companies maintain all the underlying, tomorrow any regulator come and then challenge us saying that why is that IT person coming? Maybe, may not be that point of time when the regulatory inspection happens, the relevant persons will be there, or persons may not be there. Then the underlying facts, again, unless it has been properly been presented, it will be difficult for anyone to come to know what happened at that point of time. So it is important that unless and until you demonstrate that then and there what is required to be done, it is very difficult to clarify why is that X entries have been recorded by X person. Because if you see the log, that log says that this user ID has been passed, while that user ID may facilitated the transaction to push from X ledger to Y ledger, but the audit log says something. So this is my experience when we do the statutory audit. So certainly I think these things will come into picture, and then there will be a lot of complications relating to these areas. Then user IDs. Some companies we used to see the user IDs are very unusual, and then user IDs may not be there. If you don't define the user IDs properly, again there will be complex, difficult situations can come. What data was changed? Data, transaction reference, success, failure. Again, when there is a failure happens, there will be some underlying transaction again connected to that transaction. Again, it will be uploaded and then re-entered. So that point of time, you need to be extremely careful about linking the transactions which are subsequently been rectified with the original failure transactions. Unless those things have been clearly been articulated and then clearly been given, it is very difficult to demonstrate that the original transaction with that of the subsequent entries made. Or again, audit trails may be enabled at accounting software level or captured directly in the database underlying such accounting software. Again, there are situations where the database, there are some database, in case if there are any edits to the original database, that also need to be properly been tracked and then maintained. rather than having a separate thing. So again, I mean, there is some kind of discipline need to be made, which is being tracked, and then how this audit trails and then the logs have been tracked. Definition of accounting software. The accounting software, again, computer program or system that enables recording, maintenance and reporting of books of account and relevant ecosystem applicable to business requirements. The functionality of such accounting software differs from product to product. Every organization today employs multiple softwares. Accounting software which is relevant for maintaining books of account should be considered for enabling accounting trail. It can be maintained in India or outside India. So what is relevant for maintaining books of account? Again, some element of judgment and then professional judgment is required. So it is important that those things upfront you list down and then agree, then it is easy to convince the auditors, and then tomorrow any regulatory comes for any inspections, why certain things have been scoped in, why certain things are scoped out. It can be demonstrated clearly. Again, we discussed about cloud and then SaaS based vendors also. So the next definition is books of account. So books of account includes records maintained in respect of all monies received and expended by a company and matters in relation to which the receipts and expenditure takes place. The first part of it clearly covers the P&L part of it, if I have to say so, and then the flow of money. So there are some industries which typically maintains the flow of money underlying with the standalone systems. Giving an example where some NBFCs, loans given and then loans taken, all those things, there will be standalone underlying systems through which all the money received and then monies expended will be tracked, maintained. So there are some questions before this implementation guide came, whether those subsystems which are required to be tracked or not. Take in this example of jewelry industry, where the money of scheme monies have been underlying scheme monies, they will have standalone systems where they will be maintaining. There will be other NBFCs and then there will be other companies where the flow of money, either receipt or payment, it will be coming under the standalone systems. So if you go to the definition of books of account, all sums of money received or expended, this will facilitate all the regulators, be it enforcement directorate or any regulator which comes and then asks for any trail of transactions from where the money has come, where the money has gone. This will facilitate that. So it is important that unless and until we have the complete IT landscape where the standalone systems of all the standalone systems of that company has been captured in one place, and then whether it is interfaced to the main books of account or not, unless we have that IT landscape, it is very difficult to take. So it is important that we have to have an early discussion with that IT head and then take this stock of this and then get a buy-in for all these specific underlying standalone systems which are maintaining these transactions. Then sales and purchase of goods and services. Again, sales purchase, when you say not only sales, the related sales orders, purchase means the related purchase orders, then somebody can view that purchase orders again linked to the purchase requisitions, and then sales orders can be connected to the underlying things. So that way I think again it is anything which can be connected to again purchase order sales, it is getting covered. Then the third item is assets and liabilities of the company. So just imagine the way they have clearly given the definition. First they have covered all monies, flow of monies. Second is the sales and purchases. Third is the assets and liabilities. The last is that any items of cost as may be prescribed under 148. The 148 section refers to the cost records. The cost records have been defined that any expenditure, whether it is material, labor relating to any production or anything relating to manufacture of any goods and services, that has been defined. So that way this is a very comprehensive definition of books of account. So if you feel that some of the things it is not fitting in, it is better to have a conversation with the respective auditors and then take their views and then be it very clearly documented why XYZ is not being covered, why XYZ is being covered, and then document this so that there will not be any confusion at a later point of time. So that way I think all these things have been comprehensively covered, and then again we will see what is books book and paper as per the Companies Act. While it has not been referred in the implementation guide, it is important to know what is book and paper as defined in the Companies Act. So the book and paper or book or paper includes books of account, deeds, vouchers, writings, documents, minutes and registers maintained on paper or in electronic form. So if I have to read this book and paper along with the books of accounts, somebody can argue saying that any document which is again connected to the books of account, that relevant, the trail also required to be maintained. Somebody can interpret in that way also. So that way we have to extremely careful about what we are excluding specifically. And then there are some representations went to the MCA and then other forums also where they were specifically asked to give clarity. Otherwise, already we lost 3 months. Another 9 months. Suppose if in these 3 months itself, I would not have enabled some of the things. Obviously, since they mentioned it is all throughout the year, every company then obviously will come into this the qualification of the some of the reporting requirements. So it is so we are expecting that there some more clarity will come relating to the underlying transactions. While they mentioned it is accounting software, it has its own interpretational issues, so which we will be expecting some clarity in next few days. Some of the management responsibilities, again we discussed records and transactions. Which records which need to be scoped in, which transactions which are required to be scoped in, considering the definition whatever has been given, that needs to be clearly been articulated. So the software application definition, again portals, databases, interfaces, warehouses, data lakes, cloud infrastructure. I think considering the current environment, we ourselves do not know how many things I think it is happening across the industry within the company itself. So it is important that integrated discussion should happen amongst all the required people to create awareness about these specific complaints and then get the required applications, transactions which are required to be buy. Then identified softwares have the audit trail feature. So once you identified, we need to specifically confirm whether that specific software has the audit trail feature. In case if that audit trail feature has a facility to enable and disable, again that needs to be properly been evaluated, because the moment there is a facility, somebody can misuse saying that it can be switched on, switched off to play around with some of the things. So that's why it is important that the tampering of some of these audit trail features, when the auditors are required to be committed, it is important that we should know the software that has a trailing feature and capture changes to each and every transaction. I don't know what they mean by each and every transaction, because that's a very wider. The moment you say each and every wider, I can say something and somebody can say something else. So it is very again defined very vaguely. So that way I think we need to be extremely careful about what exactly we mean by each and every transactions of books of account, when, who and what changes have been made. Again, audit feature is always enabled, not disabled. Again, that tracking need to be maintained to see whether it is continuously been there. Audit trail is appropriately protected from any modification. So in case if somebody is able to modify, there should be a log in terms of who is required to access, when it is required to be accessed, whose approvals are required, and basis the underlying policy document, those records can be, in case if it is required, then we have to demonstrate why certain things have been modified, but it has to be protected from any kind of modification, the trial required to be there. Again, we discussed about the 8-year statutory requirement under the Companies Act. Controls over maintenance and monitoring of, so before that, again, this audit log, not only the Companies Act, tomorrow any regulator, be income tax, be it be enforcement directorate, just since that this log has come into picture, they can exercise and then they can ask these details. So at any point of time, this is not only for the Companies Act requirement, tomorrow any regulator, they may have the access to some of these records. So it is important that we should keep it in proper. So these are the list of documents which are required from management. As part of audit process, the specific details which are required to be provided by the management, the list of scoped in applications, scoped out applications along with the reasons for scoping out that we have discussed, list of key transactions within each application that trial has been enabled. Then the third one is the CIO confirmation, Chief Information Officer confirmation that audit trail has been enabled from 1/4/2023 and has not been disabled at any point of time throughout the year. What if the company doesn't have a CIO? So what if X is not there? So there again the relevant people, whoever is maintaining responsible for the IT systems, that person should take the responsibility for giving a confirmation that audit trail for all those required applications which are required to be complied has indeed been compliant or not. That gives a comfort to the board as well as the other stakeholders, be it internal auditors and statutory auditors, for the completeness of those things. Again, list of users in each application who has been provided access to manage and maintain the audit trail configuration. Again, that needs to be provided by the management, so that the required, when we do the audit process, we'll come to know who has the access. Again, the management controls. Again, this is very important because it is required to be operated, the control framework required to be intended to be operated throughout the intended period. So the management controls that any access provided to the configuration and table as per the whatever we have discussed in 4 above is reviewed, and no issues have been noted by the management in each of this. So I'll pause here, and then maybe I will just wanted to see if there are any questions. Then I will just take the second part of it because it's so much I've spoke. So I thought I will just give a break and then ask if you have any questions. Yeah.
So what is the penalty in case of non-compliance to the audit trail?
So penalty as per the Act, it is 50,000, and then minimum penalty, and then the maximum penalty is 5 lakhs. But the way I think if the regulators, everybody sees, the moment it is a qualification, it has been seen very seriously, and then it has been like a black mark on the company. The penalty is only 50,000 to minimum 50,000, it is maximum it is 5 lakhs. But what we understand is this will be viewed differently. So the moment we say that there is a qualification and then somebody has not maintained these provisions, then this will be viewed differently. This is what, and then the managing director, CFO, and then the whole team directors are responsible for the compliance of this.
Periodic backup.
Yeah.
Is there a definition for periodic?
Yes, daily backups. Yeah.
It's specified in the Act.
Act, I mean, this provision is actually not covering the daily backups. The backup maintenance has been covered by through some other provision. For this specific purpose, again, they have not specifically maintained in the Act. So, I mean, they have not specifically mentioned whether how it has to be retained. Again, it is left to, but the backup requirements is separately been there. That they have mentioned it is daily backup. So, it depends on the transactions, underlying transactions when it is happening. Suppose if my underlying transactions are happening on monthly basis, no point in having those things on daily basis. Obviously, I think in the current scenario, everybody is having transactions on daily basis, minute by minute basis. So, the regulators view, based on my this thing is, it will be, they will be expecting that it has to be maintained on daily basis, because the other provisions they clearly mentioned the daily backups need to be maintained and preserved on daily basis. Basis that I am telling this.
Is there any specific accounting software that company is allowed to use?
Company is allowed to use anything which has an audit trail. Suppose I am just telling there are so many companies which use Tally. Tally has come up specifically in these 2 years saying Tally Prime with audit edit log. So that is the specific version of it, which if you use this, I think it will get compliant. So they are doing their own business of. So they have come up with that Prime with specific edit log feature. So as long as you are able to demonstrate, they have not mentioned what is required to be maintained and all. So now I think in these 2 years, many of the accounting software vendors, everybody now, they have ensured that these things are there, but still there are companies which are not aware of these provisions. They may be following the older versions. So we will have to see.
Excel, there is a problem where they have fixed assets register and so on. There, what trail should be maintained?
So again, that is again, if it is linked to, recording of, I'm just telling there are some Excel records where that is the underlying, be it be royalty workings, be it be some of these workings, in the yearly basis only it will be maintained in Excel, it will be directly posted in the financial statements. So if that be the case, Excel is also being covered. Fixed asset register typically says that it has been many of the companies still maintained in fixed asset register. Any changes made to the fixed asset register, they are asking us to how, then why only Excel, nobody has been given clarity, but it is required. How it has to be, nobody has defined, because Excel at this point of time does not have the feature of if there are changes made, it will not capture. So because if I make one entry at 10 lakhs, after that it has been changed to 15, after that it has been changed to 20, the final number change only will be incorporated, we will not have the feature.
Actually, one point there is, they say there is some feature available, but very difficult to implement again in Excel. And as you rightly said, even financial statements, what you prepare, that also is more or less in Excel. 100%, maybe 90% of the companies, otherwise it comes from Excel. The edit log there becomes a challenge.
Correct.
It captures the name of the person, but it's very difficult what has been changed.
Modifications made to the original source, at this point of time, at least I have not seen somebody is having the trail of what has been modified.
Space occupied and also implement it in Excel is a big challenge.
So now what my understanding is, many of the companies are moving from this Excel based to the underlying softwares or the subsystems, where some discipline they are planning to bring, but it is very difficult to judge. So that is the clarification at this point in time we are expecting from the regulators and the institute, saying that okay, look, first year, actually to be frank, in my view they should have done this in a phased manner. If you say that all companies required to be incorporated all of a sudden, then it requires a lot of cost, and then so many other things are involved. So that clarity is not yet come. So it should have been given in a phased manner so that the awareness also should have. So from a regulator point of view, I've already made this 2 years back. 2 years have given the time. If you have not completed, now you face the consequences.
Super user access is also a challenge.
Yeah. So if you have super user where whatever changes you are making, if that log only some few people know, or that super user access cannot be, we will not know what changes have been made. It's again big challenge. Yeah.
Basically what happens is in third party users, say,
Yeah.
third party, if a user ID is allotted,
Yeah.
they will use it commonly for all.
Correct.
In such cases, if something happens in the audit trail, or if anything is found out, who will be held responsible in that case? Because what they do is they commonly use that ID.
Correct.
One thing, so responsibility cannot be fixed to an individual.
Yeah.
Second thing, if any employee includes that concerned person to use that software for some other thing, how would that will get established? I mean, that's a challenge again.
Agreed. So, see, if you ask me if there is anything which is consequentially impacting the company is again the primary responsibility we have to take. The company has to be responsible. Then company can in turn take action on those vendor providers, from where that is why they are now saying that, I mean, even SaaS, that SOC reports need to be obtained from the respective vendors, where the controls are being operated in the intended manner in which it is required to be operated. That way, I think the SOC reports to some extent should give comfort on that. If not, the primary responsibility is again on the company. Again, they have to now educate the vendors and then see that how it has to be implemented.
Accordingly, do we need to include any clause with the vendor?
Obviously, because if tomorrow anything happens, I have to make him also.
It have to be happened even in the.
Yes.
No,
Yes.
I would just like to add some more additional points here. There are three aspects involved. One is usage of generic ID,
Yeah.
then password compromise and password sharing. So because of this, the audit trail as to who has done the transaction will not be known. So as far as the best practices are concerned, say take for example in our company, password sharing is a strict no-no. Any first instance of password sharing can lead to the termination of the employee. So it all depends on the type of policies that you frame and enforce it. And again, while Generic, as you rightly said, for third-party vendors, generic mail IDs should be, say, for example, he works on a shift basis. So the generic ID would be would be used by multiple people across the shift timing. So in those cases, adequate controls need to be built as to what time that change took place. So these are some of the controls that need to be incorporated. Yes, the agreement needs to be very clear on what is to be done and what will be done if that is not followed.
So there is one question came in the online. Office Excel 365 Excel, we can enable version control by which we can see any changes done to any Excel workbook by any user. So I'm not sure whether the modifications done like original to these updated numbers, whether that can be tracked. At least I have not tried it.
I have tried, sir.
Yeah.
It is very much available.
It is available.
Sir, again, Excel is one tool
Yeah.
whose scope is unlimited.
Correct.
So even if somebody, many times when interviewing people, they come and tell that they are expert in Excels, but hardly, they know only the VLOOKUPs and pivot tables and addition, deletion, but that are the very, very rudimentary and basic things which an Excel can do.
Correct.
Even if you have 5% or 10% knowledge of what an Excel program is capable of, then the entire world gets changed.
Agreed.
Shared folder, I think we have a lot of.
Yeah.
Shared folder, I think only thing is, first one to do is you have to create a password. Okay, and when someone is editing, if it's a financial statement or a key working, something has to be evidently known what is that guy going to do. If he uses the password to open, when he opened, you have to create a separate documentation of it totally, even if you're not having an edit log. Say that is the edit log. I have made 10 edits. First edit this day you have made a log. As of now, that will be the solution, but you have to do it. Correct, and the first thing to do is maintain a password first to open and not share that to everyone. Who is opening it, that particular guy. Suppose there is only one financial statement preparation guy. What he is changing, he has to maintain separately. And that is the feedback we have to
Shared an audit trail. Yeah.
Yeah, right. Whatever he changes, I will say, sheet, this particular row, I put it like my audit documentation of whatever I do. The Excel sheet has to be told to the management, this is how we have to do. It is very difficult, but it
So the other thing which has come up is that when you have multiple passwords, how do you track all these passwords? That is on a lighter note, somebody has asked me, sir, I myself is struggling with my own passwords. So how many passwords you want me to maintain? How it has been, how I can remember all those things? Where will I secure all those things? Where will I keep it in a manner in which it will be again secured? So again, it is a practical challenge. So again, that also need to be discussed. Again, some of the things mentioned saying the moment you put password and then there are a lot of things happening, the file size of an Excel is getting very, very big, and then at times it is also crashing, I believe. So that is again a very practical challenge which others are mentioning.
software where you are only having the access to change. For example, some payroll software or some other software like your ECL computation tool, where I will be allowed only to give the inputs. Suppose if some change happens, something happens at the back end. So things have to be seen how it happens, whether the tool is going to give the capability of it. A lot of payroll tools, the company only has access to enter data. If something happens in the back end, I think more onerous should happen there now. Previously, you would only match the GL payroll with overall thing, but we not sure. Suppose you change some indicator, even in your ECL calculation, you change some economic assumption, something, it calculates something and it will give you a different answer. So what it does at the background, I don't know whether we have to go inside it and find out those logics, which people might not be okay to share also. Then it's again an external system. Generally, it is done by all those independent people like Indra, others who are keeping it actually. So they don't even access to you to log in and take the data.
Not only that, any back-end changes, be it deletion, you invariably there will not be any audit trail. Let us accept that fact.
Yeah.
No, madam. Best practice is there. We expect, but say for example, let me give 2 examples of backend. One, if a voucher is deleted, then the serial number they'll get caught by 1, 2, 3, then it'll jump to 5. Then it's very obvious. But if they go and change anything in the voucher, it's next to impossible to find out.
Yeah, there's a concept called history tables, sir. So in the database, when they are creating the architecture, they have to enable history tables.
we are having RBI and SEBI circulars where audit trail is mandatory for NPA records, MOCs passed by the banks, etc., where this is already implemented. So what RBI is expecting is this edit logs should come as a front-end report where the auditor is able to go through the edit logs for the NPA accounts, red flag areas, deleted entries, reclassified accounts, etc. So it is quite possible. The thing is, they should have implemented it. Otherwise, it will replace the record. So now I think if they are doing it now, we need to qualify it in the audit report because specifically in that guidance note, there is a requirement where we need to highlight the instances, how many times it was on, how many times it was off, what is the period of duration when it was not activated. So this should come as a qualification if there is any record that is getting replaced without audit trail.
So there are two aspects again here. One is the competency of the auditor to get into all those things.
Yes, yes.
Second thing is that because the time required for going through all these details. If the competency nor the time has not been adequately been provided or it has not been upfrontly planned, obviously whatever we do, it will become a compromise of the audit process.
Now itself we are late.
Yeah.
It should have been from 1st April, we are in July.
Already I think half of the companies will have qualifications readily available.
One more thing is the cost will also increase.
Obviously, I mean that is the first
Cost
thing.
from the company side to be charged to the auditors will also go up.
Yeah. Obviously.
I think that will be a big challenge to manage. Already you will face a lot of consequences in getting the fees agreed, or those conversations also have to happen.
No, cost of compliance is so high because if we have to change from that version of, let's say, I think most of the companies underlying at this point of time using Tally. Now they have to go with the TRAMI Prime with some edit log facility. Obviously they will have a demand for that, and then licensed version only will have all these things. So the cost of compliance will certainly shoot up. Maybe we'll have to see how those things will be shaped up.
Books of account.
Yeah.
You said this very term is prone to, lot of interpretation. I didn't get that because with what you shared on the slide, it appeared to me as if every aspect was covered, including minutes of the meeting, records and registers. Only contingent liability was and contingent assets were not covered.
No, actually,
get
It also has to be
I mean,
recorded somewhere, madam. Contingent
So
liability also has to be.
now the point is, where is it scope for different interpretation?
No, I will
That
explain.
is where-
I will
yeah.
explain. So when you see the books of account, what they mentioned is accounting software, which is connected to all the underlying documents which are again recorded and connected with the accounting software. Where the book and paper is what is defined as per Companies Act we have presented. That is nowhere they have given. This is for our own interpretation. I have just put it here. But that book and paper is not being defined. So that is where a lot of things are coming. If the company is coming up and then saying that, let's take an example of BOM. If there are changes to my bill of material based on operational related things, do you require me to have a tracking of all the BOM related things? Obviously, maybe, may not be also, because that this is an operational related record. If somebody can interpret saying that, no, yes, BOM is also again related to production, again production cost will change in case if there are changes to BOM, somebody can interpret. I am just giving an example. So there are some subsystems where operational related details have been maintained by many of the management. So those things we need to see how those things are getting impacted. That's where I am coming. So many things will be there. So it is next to impossible. Why would I have to go and then check and then track each and everything? Then it has nothing to do with the accounts audit or anyone. No. So then it is a sensitive information also. Sometimes if you are... Yeah. So that book and paper has not been again given in the implementation guide. But someone can interpret and saying that book and paper is defined as deeds, vouchers, any underlying document. So you have to maintain even that also. I mean, regulator can come back. That's why I put it. But books of account has been defined, and then anything relating to financial books of account connected to these, all these definitions, whatever be it be money received, flow of transaction, expended, income, all those things certainly we need to cover.
I have a question.
Yeah.
With respect to any established ERPs like SAP or
Yes,
even
yeah.
Oracle or whatever,
Yeah.
you have audit logs for it.
Correct.
Audit logs with respect to the purchase requisition as well as purchase.
Correct.
Purchase order also.
Correct.
But if you take in other basic softwares like Tally and all, there is no such feature. There is no such feature. I do not know whether it is there now also. I'm 100% sure that it will not be there.
Okay.
Now my question is, based on this interpretation, whatever we are saying, as far as books of accounts are concerned, whether that is included there, edit of PRPO also included there.
So if it is connected to, again, value, and then value is the basis on which I am incorporating an entry, I am just talking about logic. I am not talking about the law and then the definition. If it is been connected, that's why I will present, saying that suppose if anything relating to change in that specific underlying document will have some implications or the other on my books of account, recording of transactions in my books of account, then that need to be tracked.
Okay.
In case if that is nothing, then everything, then I can argue anything. So then it will be very difficult to judge.
Fine. Okay.
So here again, I have a small, sorry madam, I've been trying to talk for a long time, but see here, just staying on the PO.
Yeah.
Suppose initially I issue a PO for say 50,000 rupees.
Yeah.
But the transaction is not yet recorded in the books of accounts.
Correct.
Later on when a supplier decides to either revise the price upwards or downwards. 50,000 can become 60,000 or it can become 40,000.
Correct.
So at that point in time, I make a change directly in the PO itself, in the original PO.
Okay.
And record that transaction in my accounting system.
Correct.
As purchase.
Correct.
Do I need to have an audit trail for the change made in the PO?
Yes. According to me, yes. Because that is an immediate transaction which have implications on my...
No, I don't. See, it's not a change to a transaction. See, basically...
I agree.
It has got nothing. I have recorded it correctly as what I have paid for that services or goods.
Correct.
So it has no impact on my accounting transaction per se.
Agreed. I will have only one counter, sir. In that, in his employee who is involved in just doing something with that 50,000, making 60,000 or vice versa. I mean, with a different intention.
What difference is make? A company has paid only 40,000 or 60,000 instead of 50,000.
No, I'm saying somebody has done tampered something with an intention.
No, sir. Tampering is if it is 50,000, he's paid 16% supplier. Yes.
Correct.
That's becomes an FCU, fraud.
Correct.
But as far as company is concerned, there is no alteration because my PO has been for that amount and I've got services or goods to take.
So what you are saying is, it is before I issue PO, negotiations further happened.
No.
After
issuing an example.
No, I'm saying, logically what it is, looks to me is, if after issuing a PO, in case if negotiations happen, then certainly that need to be. Before issuing PO itself, if there are negotiations, maybe, I'm only trying to articulate. Suppose if a PO has been issued, after that there is something happened, I don't know how to establish that. Tomorrow that vendor will receive at 60,000. Tomorrow he made the change or not, I don't know. So then it will be very difficult argument to substantiate. Sorry, something.
So one extension to his, like what I was also thinking is like, so though everything is related to books of accounts, at the end of the day, you were mentioning on the vendor master updation, right?
Correct.
So coming to that, I don't think that will have a direct impact on books of accounts. See, vendor master, any update or as such in the bank account, that will not have. So when it comes to this particular audit trial amendment, we cannot trace it back to that level of, vendor master updation. So one step down, whichever has impact on the books of accounts, we can understand. So that was one of the point that I had. Like second one, extension to what he was like mentioning. SAP already it's an established software, and even after this provision, this amendment, what SAP has come is like, if you are able to substantiate or if you are able to prove your regulators that whatever you're maintaining satisfies, then it's okay. So they have left the responsibility to the companies. So taking that fact into account, what I personally feel is like companies whichever has SAP. Already this whatever audit trial is required is already there in place. So taking that fact into account, like can you just brief us as to like in your clients, which were any specific points which was not included in SAP, which they have taken effort to get all set as per this amendment. That is one thing. Second one on accruals, say, which is like we are all talking about the manual entries. So it's automated entries. How will we be able to substantiate the 3 W's, namely like who, how, and like who, what, and when. When I think, okay, anybody can trace it. So automated entries, how do we tackle? So that is
the first question about the change in the transaction, be it customer, vendor and all. If you see the transaction, it is not a change to the original thing, but it is a transaction by as such. So that is that way it has been covered to say that if there is anything which is a transaction that need to be identified and then some log should be there. That is what it says. That is point number 1. It is clarified also. The second one is about the SAP. In SAP, Oracle, many of the companies we are saying that the logs are there by default. But what we are seeing practically is there are tables where the logs are not being managed, because by default what we understand in the recent audit, they have implemented SAP S4 HANA, but my ITGC has been failed. When we go back to the details, what they mentioned is audit log by feature you can't disable transaction audit log. That is already there, you can't go and then change it. But the tables and then the audit log relating to tables, they have not enabled. That is a little technical about that specific aspect, which some of the companies they have not enabling it, because of which the ITGC has failure is happening. Yes.
See, one of the same ERP case in an example what we have seen, but it was ensured from 1/4 that it was ensured from 1/4 that after we have done the ITGC of last year, that it was an Oracle based company only, where due to cost considerations, the company has not enabled Audit Trail till 31st March 23. So we had purposefully seen that, considering we have to see this, and they have made it effective from 1/4. There was a feature in disabling Audit Trail, and that's what he was telling. There is a feature in even ERPs to disable Audit Trail, and the guidance says you should not have that feature starting from 1/4. If that feature is there, that itself is a problem. We have to check whether it is disabled sometime.
We have to represent SAP and then Oracle and then ask them to change.
It's actually a problem because they are saying cost considerations. The company which I am talking about, it's actually a big company, and they had enabled it considering to comply with this. And they are not complying it considering the cost considerations.
See, the other point is that SAP's Oracle's and all, it is not really, specific to India. When they make any change, that is an international global changes. If they make changes, everything will get impacted. So law is prevailing at this point of time in India. But why is that somebody will change because of Indian requirement, unless and until they come up with a newer idea of coming.
One more issue is the group entries which some companies might pass as well. In case of companies with US GAAP and their own reporting, they will pass a lot of entries for their group accounts purpose, and the entries gets reversed for IGAP. So to maintain, sometimes they do that in Excel also. So now they cannot do it in Excel, or they cannot keep it outside, practically speaking. Because previously they used to say group accounts, and this is only yearly once what I maintain. I account that in Excel and I post it as a single entry for. So now detailed documentation they might have to keep, and it's actually again, everything again goes and links back to cost also. Because they have to implement it globally. So create another 13th period or some period entry where they have to create these entries and track them. I think it's not, practically it's not going to be really easy in convincing clients also and taking it. And as he said, it's best to deal with them in the first quarter itself to tell all these things so that at least with some level of things we can come out of it.
And then the last thing about the accruals which has been recorded and then the automated entries to reverse it. Even automated entries, the moment a reversal happen, that is linked to original transactions, that way you will be able to demonstrate easily.
Anyway, there will be an entry record. So just like a month-end provisions.
Yeah, month-end
you just part the system, on next day of the working day, it gets reversed in the system automatically through an entry.
Yeah, see the whenever you record an entry, let's say in SAP or Oracle and all, it has a facility reversible, non-reversible.
Non-reversible.
The moment it is reversible, those are all the temporary provisional entries which will get automatically reversed and then trued up in the next period, which you can easily demonstrate. The non-reversible automated entry, like pushing the subledger to the main ledger, then the system will have a trail, who pushed it, when it happened, it is a batch processing, all those tracking in the system it is available. So that way, the established ERPs has that adequate, the trail to give the, log of what happening from subledger to GL process.
And it also show for most user ID it was done. So that's an audit trail.
Yeah.
No, one more thing is the back-end calculation will be based on some pre-written calculation or whatever we talk about. Suppose it's a royalty or whatever entry, it's an automated. You will have a back-end calculation of that happening, even interest or effective interest entry. Lot of things happen automatically. The logic will be already defined in the system. And as he said, who passes it will know. Like, it's done by the system on its own, but whether the logic is right or wrong can be checked. So that will become...
Small change, not who did it, but whose ID was used.
Right.
Yes. Because we don't know. I can pass an entry using somebody very difficult.
The challenge really comes is what we have seen in the past, some of the automated entries, GL as well, there are possibilities in overrunning it and manual entries getting passed there also. That is a big challenge where in some of the inventory entries we have seen in the past that they have disabled the automated. So we used to tell in the ITGC and other check to check manual entries passed in automated accounts. And that will be very evident now. Those possibilities are also there. It's not like in SAP or Oracle nothing can be done or cannot be done. That's actually a myth.
Actually, sir, what he's saying is a failure of the IFC.
Yeah.
And today they have single sign-on, Okta and such software, which will address most of the issues.
Correct.
And continuous integration and continuous deployment takes care of these software issues.
Correct.
So maybe we'll have to do a technical session sometime.
Yes,
later.
yes.
Role-based access can go to activity-based access.
Correct, correct. No, very true, very true. The other thing is that some of the multinational companies, I've seen that the underlying core areas, the respective group companies only will keep a complete trail record of those transactions. I've seen in be it be Japanese, Koreans, Chinese, other companies. I'm just giving an example, not to refer anything specific. But I'm saying that some of the things we have to educate the group companies that this is the law of the land and then we need to comply it. That itself is a huge process. So we are seeing a lot of even normal accounting entries getting explanation and then providing itself from an audit perspective. It is so difficult from the management side also and then from the audit side also. So it is important that we educate, create awareness from the start, because smaller companies like less than 100 crore company, they are not worried about all these complaints and all. If you just keep qualifications from each and everything, then you just imagine every audit report now itself I can draft and then keep it ready. So just I'm telling the smaller companies, they can't afford to do all this.
Okay, see, you had told in a presentation that the organization can scope in and scope out applications.
Yeah.
This is the impact or relevance on the accounting transactions.
Correct.
Similarly, within an application itself, can transactions be scoped in, scoped out? Again, staying with Madam's customer database.
Correct.
There the bank account details, GST and PAN has got an impact on the accounts, whereas change of address, change of name or change of telephone number has absolutely no bearing on the accounting.
Correct.
So can those transactions be scoped out and told that there will not be any audit trails?
So if you see that the earlier slide, where the management responsibility, it is specifically said each and every transaction. I don't know what is that each and every transaction means, then there is nothing to scope out. And then some of the places in that notification it says that all relevant transactions. So it has again debates and then points. But I think as long as you demonstrate that
exactly,
it has
this talks only about audit trail for transactions impacting the books of accounts.
Yeah.
But I don't think a change of address will have any impact on the books of accounts.
Possibly. Possibly. Yeah, obviously. Yes, yes.
What is the definition on that? Will it be at field level or entry level?
No, at this point of time, these are all left to the judgment of the management and then the company auditors. And then company's auditors. So that's why there are a lot of, guidance is expected on these matters. A lot of deliberations are happening, whether, I'm just giving an example. Let's say bank account, there's a change. Bank account is a sensitive information. Tomorrow it will be prone to some frauds and other things. Somebody is saying that no, that is very, very critical. Where a conservative person will say that no, some 100% that is 100% required. Some people saying that it has no relevance and then meaning unless and until I had a transaction with that. So it has its own implications and consequences. We need to wait for some of these clarifications. At this point of time, these are all left to the judgment of the people. As long as you document For my business, it is not relevant because of XYZ reasons. I think that is more sufficient. I think that's what he was also explaining. If you can able to articulate, see again it is a first year of implementation. You will see umpty number of representation. I am sure by 31st March 2024, one another notification which came that another year it is deferred. Nothing can be done. So one day before that can also be happening. We don't know. But at this point of time, they have not deferred it. Because that's how happened last year also. Exactly on 31st or 30th of March 2022, they have come and then they said it is deferred. So possibly if all this representation goes, possibly that either you have to accept that yes, we want to do it, and that too it is an election year next year, so it has its own challenges. Anything else? I think we are again running short of time because good at least a lot of thinking and then thought process. Yeah. If not, I think we can discuss the indicative audit procedures. Can you go to the procedure? So these are the indicative audit procedures. Again, this is whatever we spoke only, it will come as an audit procedure. One is that identification and completeness, the records and transaction where audit trail needs to be captured, that need to be verified on a test basis, because obviously we can't do 100%. How again need to be documented, what test basis we are mentioning, it is again left to the judgment. Again, the management approach regarding identification of accounting software, because what is the thinking thought process of the management while the identification of accounting software. So that is again we need to evaluate. Change management. So again inquiry with the management how they evaluated changes that are required for the maintenance of audit trail as part of changes or upgrades to the accounting software. The last part is very critical, that the controls, the management controls and policies, such as the restricting access to administrators and then monitoring changes to configurations that impact audit trail. It can be software configuration, access to such configuration, changes to audit trail configuration, and periodical review mechanism implemented and operated, completeness and accuracy of the audit trail and edit logs. Again, whatever we spoke from an audit perspective, it is converted into an audit angle, and then last thing is very critical, involvement of specialists. So at times we may not be completely competent about understanding some of the underlying tables and all, so it is important that we involve IT persons who has that required technical capabilities and then competency to go through some of these things. Again, the cost wise, again it will have its own implications. Next. Again, evaluation of controls. So again, the audit trail feature has not been disabled or deactivated at any point of time. We need to identify those controls and then scoped in. Controls to ensure that user IDs are assigned to each individual and user IDs are not being shared. That is what he precisely mentioned. If you share the user IDs, nothing can be tracked and traced. Who is actually doing? Again, it is left to the individual's ethics and then honesty to confirm. And then controls to ensure that changes to the configurations are authorized and logs of changes are being maintained. Just go back. The last point is the controls to ensure that the periodic backups are taken and archived as per the statutory period specified under the 128 of the Act. This is what is the 8 years period. Again, what is periodic backups? It has not been defined. It can be daily, it can be fortnightly, weekly, and then yearly also. Again, some benefits. First is that fraud prevention and detection. So if you implemented this robust log, somebody can say that it can deter potential fraudsters, and then it promotes a culture of accountability and then transparency. While it is very good to have all those things, the cost of compliance of this is very high. From a management perspective, again, it's an additional burden. The next is accountability. Individual accountability can be established through this edit log. Somebody has that moral fear, is somebody is checking, and then there is a log, edit log which has been there. So that way I think this is very good. And then reconstruction of events in case if there is anything happens. So if there is an audit, logs are being maintained, any regulator, be it be ED or be it be any regulator, they can understand the sequence of transactions from the source to the final, and then they can reconstruct the events. Maybe this is very useful for the investigating agencies to reconstruct what happened. The last is this intrusion detection. It recognizes attempts to enter a system and gain unauthorized access. If somebody is trying to access some of the unauthorized people, we will be able to get to know this. The challenges, again.
Yeah, I just have a question. How about the notes on accounts? Anybody asked that question on notes on accounts? How does this work related to notes on accounts?
Notes on accounts.
I had a question behind on contingent liability, right? All the banks.
Off-balance sheet items.
Off-balance sheet items. How do you deal with it?
Because if I see the definition of books of accounts, that has not been recorded in the books of accounts. That's why I will interpret it. But if we notes to accounts also, if we need to have.
No, only one point is books of accounts. When you are trying to certify, when the auditor you give us an opinion, you include notes also. Correct. Now, if you say financial statements gets covered as books of accounts because Excel doubt is there, correct, then notes also will come into it.
I agree.
The way interpreted it that way, as you said.
I will split into two parts. There are certain notes which are emanating from the books of account and then financial statements. There are certain things which are coming out of the books. So, like contingent liabilities, nowhere there will be anything which will be recorded in the books. The completeness of that, it will be very difficult to ensure. Like that, there will be qualitative notes which will not be coming from the books of accounts. I am referring to those notes which are not coming or emanating from the books of accounts.
So, one example could be even that sustainability reporting and things which comes now. So, what to do with BRSR and things?
No,
that is even a challenge.
BRSR is mandatory for some companies.
Right. Yeah.
But it's going to be expanded next 3 years to all companies, right? Most of them, even though it's only SEBI related or top thing, the challenge in notes on accounts, why I'm bringing that point, most of them are related to financial information, or it's note is not worth it, right?
Correct.
Whether it's qualitative or quantitative or whatever it is. So that's why I asked that question. Off balance sheet items, I was talking banks, okay? Banks is the biggest risk. So contingent liabilities. You have guarantees, right? Financial guarantees. Financial guarantees is the biggest issue in most financial instruments. And so how do you deal with such situations? Especially the banks. I was having a long debate today also. You have something called out of office accounts or suspense accounts. So these accounts are like multiple entries fall in, multiple entries go out. How do you deal with some of these things? And by this audit trail, I didn't come on the reporting side, you're coming to that. How often do you suggest? Some of these good practices need to be brought about. ERPs is one story, but the other side of the story is maker checker is another thing.
Correct.
And you have so much conflicts. Okay, I'll bring if there is a conflict in maker and checker, will this impact the audit trail? I'll just lead one question here, and I have a lot more questions, but I'll leave the audience also. How do you deal with you say segregation of duty is not adequate. You write a report. Will this directly impact the audit trail? Will this be a qualification of the report?
So at this point of time, they were not talking in the reporting framework the conflicts between the system, because that's not been covered in either in the implementation guide or in the notification. But logically, what you are saying making sense. Maybe I think next year they will think of it and then they will.
No, only one thing is SOD conflict. It depends, because again, when you are having password sharing issues, that's why SOD has a conflict, and there is no two people checking, as you said. Someone passes the entry, only approves the entry. In that way, where is the approval process, or where is the trial coming there? See, if he wants, he can put instead of 200, 20,000 also. So in that case, it will affect audit trail, given that example. But the other example could be something which does not affect financial statements. Something, an address change or something where it is not approved or it just goes on its way, whether the address is not going to hit any number. So it depends again. You can't have one answer to it.
So one more question. The quarterly financials starting, what is the Deloitte view on it? Sorry, I can't use Deloitte. What is your view on it?
No, I mean, there is no quarterly reporting, or if it is in this
No, if I'm just saying limited review, right? Yeah. And not most required. Of the limited reviews are now audited financials, okay? No longer it's unaudited financials.
Yeah.
Now, somewhere on your report, you are saying we reviewed a limited review or whatever it is. Will this audit trail be brought in as a reporting requirement audit trail? Okay, you miss it. You come to the year end. I'm not putting in a spot. This is an open question for all because these are all very open topics. Will you put a note on your report?
No. Because at this point of time, there is no reporting obligation for me, be it be audit or under the limited interim report financial reporting framework. I need to comment on 143.3J. So specifically, since it has not been covered, my view personally, nothing related to anything, so that is not required.
Only one point is I will not report in my audit report, but 2-3 good things to do is bring this to the attention of the audit committee.
Of course.
In my presentation saying that clearly this is effective, please look at everything, ask everything like third party provider, everything, please bring it. I think which has been done even in the March presentation, we'll continue to do it in June presentation also now.
Obviously, June is already impacted.
Right.
Because half of the audit report we can draft it based on whatever we are doing.
So there are two questions. Sorry, guys. One is the PMLA. No, PMLA has brought the charter account, all those guys under PMLA. That is the prevention of money laundering. And secondly is the NFRA. All the NFRA latest notifications, one is the fraud or implication of the fraud or this. This again has been objected by the ICA also, they have taken it up. How do you indicate fraud? Now this audit trail vitiation or a segregation duty, will there be a requirement? Because now no longer you need to wait for the year end. If there's a whistleblower or even a small thing, the auditor is now under whatever NFRA is becoming a regulator by himself, more than SEBI, he's gone to report. So this is an open question. Again, sorry, I'm taking 2 more minutes of this. How do you interpret some of this? Because you don't need to wait till year end or quarter end, right? You're going to have some issue and you have an audit trail issue and a conflict issue. Will this indicate something like a fraud? Now this fraud indication is direct or indirect or seemingly a fraud. Okay, this is a very, very interpretive issue or a discussion. How is your stand on that? Is there any guidance note which your firm has done it? I'll take my sign of IAA president here to act to the question.
Yeah, at this point of time, there is no specific reporting obligation which they have casted here. But in case if you come across any extreme situations of identifying any fraud, and then which will be coming under the framework of Companies Act, where I have a reporting obligation where the thresholds have been met and then I need to report, then obviously that need to be reported. But from an audit trail perspective, that has not been brought in. And then the reporting obligation at this point of time, it is yearly. But as a practice, somebody has to really evaluate on a quarterly basis, nothing to wait till year end and then just open up the entire Pandora box. 100% that is required to be evaluated quarterly. Because it started only now, everybody is now thinking in all these aspects. Now only they are relating. There are a lot of debates happening. Maybe once that clarity comes, that will be clearer for us to take how it has
One challenge which could come is, though you say you will evaluate on quarterly basis, management will come back and say your actual reporting of ITGC or the controls is only for the year. So I will not invest time now. So some clashes could come actually.
No, in case it is an extreme situation of fraud, and then I have a reporting obligation to the regulator under the Companies Act, once that is, crosses the threshold, yes, that is qualitatively required to be evaluated upfront rather than waiting till the year end comes. Because everybody will become panic at the year end if you go and then tell them there's something happened like this. And then regulator also can question, in case of fraud, something you have identified, what stops you in just intimating or communicating in case if that is required?
No, what not only we identified, they gone one step above NAFRA and said what even management identified or somebody else told also you report.
Yes.
Don't escape by saying that it is identified by them. That we have a big challenge to meet actually.
No, I agree. Okay. There are some few challenges. These challenges also, I think something or the other we have touched upon. Relevant applications we have discussed in detail, I don't think so. Inadequate IT infrastructure, this is where voluminous data logs, how it has to be captured, and then you need to have adequate infrastructure to make sure that all these things have been kept appropriately for the intended retained, period for which it need to be retained. Then complaint implementation, listing with the tech support team for implementation of design solution with existing IT environment, align with outsourcing partners. This is very, very critical. Wherever vendor application at times we will miss out to include that. We need to have early discussion. Maybe their engagement letters or whatever is their vendor agreements underlying need to be incorporated the specific clause which they need to comply, because many of the things it will be rolled forwarded from the previous year. It is the time that you have to go back and then change some of these things. Administration of audit trail feature, again ensuring a robust control framework pertaining to administration is very, very critical. So if there are any unauthorized activities which is happening to audit trail, that needs to be properly been identified and the policy framework should be maintained. And monitoring of heavy logs. Again, this is frequent monitoring of heavy logs. It is next to impossible. So underlying, there should be again policy of what needs to be done, who has to do, the frequency, and then what they need to cover during that process of review. Again, it required to be established. Again, archiving periodic backups. This is what we have discussed earlier, whether it is required to be taken backup. I mean, periodic, again, it has not been defined. So taking cue from whatever the other provisions, maybe they will expect daily backups, but it all depends on the size and complexity of the company in which it is operating. Expected scenarios from an audit report perspective, management may maintain adequate trail as required by the accountants. Clean opinion, scenario 1, no problem. That all the 4 aspects we can give. Scenario 2, management may not have identified all records, transactions. It is records as well as transactions for which audit should have been maintained, but it has not been maintained. So third is accounting software does not have the feature to maintain audit trail, or it is not enabled. So the 2 and 3 is the question where the modification of the audit report will come into picture. Then we will discuss what are the, so in this is the unmodified report. So be it be standalone, consolidated, there will be 4 aspects which will be covering. One is that based on examination which included test checks, the company has used the accounting software for which it has a feature of recording audit trail, edit log, has operated throughout the intended period and for all the relevant transactions. This is where a lot of judgment is involved. So whether what is relevant, what is not relevant, again it is left to the judgment of the auditor and the management to discuss and then agree upon. And then it is not, we have not come across any instances of audit trail feature being tampered with. Again, it is very, very sensitive, so it has to be again discussed, verified, and then come to these conclusions. And then the whether the preservation try of these audit logs coming from the second year onwards. So first year it is not applicable because first year is the year in which we are implementing things. From the second year onwards, the preservation of the records in accordance with the law or not, we need to maintain. Again, this is same replica consolidated. When it consolidated, if the same auditor continues, he will be able to report. If the other auditors continues, the group, the component auditors, the instructions need to be given where they need to comment, basis which the parent auditor will comment on all these 4 aspects. Go to the next.
I just have a question here. What do you mean by accounting software?
Go back. No? First slide you have to.
This one. Accounting software. What is the definition of?
That's what I'm just going back to the accounting software definition. Going back. Go back. So very, very first slides you've made. Just go back. Come. No. Come down. No, next. You are going back. Next. Next. Stop. Back. So the definition of accounting software as given in the implementation guidance note is system that enables recording, maintenance and reporting of books of account. Recording, maintenance and reporting of books of account and relevant ecosystem applicable to business requirements. Again, it is very much big English has been written, so we need to clearly interpret and then see how it has to be fit in. Then the functionality of such accounting software differs from product to product. Every organization today employs multiple software for accounting its operations and other requirements like consolidation, collection of data. For the purpose of our reporting, that is the auditor's reporting, only the accounting software which is relevant for maintaining books of account should be considered for enabling audit trail. Accounting software may be hosted and maintained in India or outside India, or may be an on-premise or on cloud or subscribe to SaaS. So that way I think it is.
Now that hosted outside India is conflicting the regulation, right? Current regulation should be hosted in India, right? There are a lot of regulations in India.
Yeah. Outside India also.
No, you have written maybe hosted and maintained in India or outside India.
Correct.
It should be maintained in India, right? That's the
Now, if it is maintained outside India, the respective logs backup should be maintained in India so that the the regulator can come and inspect those logs. That's the law. Because some of the multinational companies, I am seeing their operations entirely being operated outside India also.
But I have somewhere that there should be a
Proper full books in India.
Correct. Yeah. No, accessibility should be there for the people in India. That is, I agree, because a lot of companies.
The server itself should be in India.
No. Many of the companies serve outside India only.
No, sir. They should have mirror server in India.
Everything should be in India. Just watch out that language. I can have a clarification. Well, MNC companies have a big issue. This question has been coming up to me
So
at
for
least.
that, AWS has created one data center in Hyderabad very recently for accommodating that provision.
Agreed, but from an audit perspective, I am seeing many companies outside India also they maintain, but mirroring server.
There's a big issue there. You just take a look at that because that question.
I think I could take in section 128.
Yeah, 128 only. Yeah.
Their server should be in India physically.
With all the books should be accessible.
Correct.
Sorry.
Accessibility is what I mentioned. Yeah, the accessibility. What I understand is that in case if the server is outside India, I need to have access to those records which has been maintained outside India, so that any regulator who comes and then inspects, they should be able to demonstrate and then show what records the company is maintaining locally to comply with the local laws of the land.
Okay, we'll go on. Sorry.
We will also debate, sir. I think. Thank you for bringing. Yeah. So this is.
Another point in that slide, there is clarity on books of account, the point on books of account.
Yeah.
So there's no ambiguity, I feel. If we can go back to that slide. So you have definition of the software, accounting software.
Yeah.
See, it speaks clearly only about the accounting transactions and the related trade.
No, relevant
Isn't
ecosystem.
there clarity? No, what
No.
it says is audit trail pertains only to books of accounts. That's what it is saying.
Agreed. So the books of accounting.
That is where the problem is.
Yes.
The Excel sheet is also a books of account. That's the problem. That is and also any purchase order is a books of account.
No, the
Various accounting software at different levels. Just read that.
no come back. Next. You just put next.
What is books of account? That's where the problem is.
Yeah. Correct. So it is an inclusive definition. Includes. That anybody can interpret saying that it includes the underlying vouchers also, purchase requisition also, something also. I'm also interpreting. Yeah. Okay. Go
It's
back.
like IFC, what comes under financial transaction.
Yes.
Even appointing a watchman is a financial transaction.
No, earlier we used to debate on all these things. Okay, next. Go to the next one. Yeah, so this is a unmodified, standalone and consolidated report. Then go to the next one. So again, where the audit trail feature was disabled for one of the books of account records for an accounting software. Let's say fixed asset software did not have the audit trail. They have not mentioned fixed asset register. They mentioned fixed asset software. So that is, since it is an implementation guidance note, they are very careful in maintaining that. So in case of specifically one specific thing has not been, the audit feature was disabled, we'll just say the company has used accounting software for maintaining so and so, except in the respect of maintenance of fixed asset records, wherein the accounting software did not have the audit trail feature enabled through the year. Further, the audit, the facility has been operating throughout the year for all relevant transaction recording software, except for the instances reported below. Wherever it is not, the complete period has not been maintained, those things need to be specifically called out and then tabled below, where they can say that during this period to this period, the audit log has not been enabled.
So what is this a qualification?
Yes, modified opinion.
So modified.
Yeah. So
subject to.
Yeah, except. And again, it is not like an opinion; it's a statement of fact. So it is a statement of fact. There is nothing where I can use materiality X, Y, Z. It's a statement. It should be based on true facts. What is true, we have to state that.
In the audit report, in which paragraph it will have to be given in the main audit?
in the main audit report, when we report on other regulatory matters under 143J, yeah, the last just before the, no, not Karo, main audit report itself, in the last paragraph just before the signature of the auditor, now all these things are being.
Printing obligations and other things. The last.
Yeah, correct. So it is not under Caro, it is under the main audit report itself. And then the next is that audit trail feature is not operating effectively during the reporting period. Again, we will mention except that the audit feature of DAS software used by the company to maintain payroll records did not operate throughout the year. Payroll record is an example here. And then again, that no audit trail enabled at database level for accounting software and then BBB for to log any direct data changes that has not been enabled. We can give the relevant details. These are all examples which is given in the implementation guide. Then accounting software is maintained by third party. That's what exactly you specifically asked. So is unable to assess whether the audit trail feature. So this has been again, the company has used an accounting software which is operated by a third party software service provider for maintaining its books of account, and in the absence of the type of control, it can be SOC 1, X, Y, Z, we are unable to comment whether the audit trail feature of the said software was enabled and operated. And then if there were any, if there are no instance of tampered, we can mention if there are any instance of tampering which noted, that needs to be clearly called out.
So what happens if there is a cyber attack or something?
That you are the right person to know. You are the technical.
I just brought a topic on cyber attack, which is very common, and most companies are now losing data or at least having data thing and coming back. So there are various instances where our disclaimers are being, we are going to see some disclaimers also coming out on some of the reports. So any thoughts? We can have an offline discussion.
Because of the cyber attack, audit trail feature has been tampered with or affected, then only reporting under this clause will come. Otherwise, that is a different issue altogether. That is IS related matter.
No, the problem with cyber attacks, the direct tampering with the trail.
Correct, but whether I have a proper backup procedure.
So when I say tampering, there the intentions of the management will come into picture, where I did something with an intention to do, conceive something. So if I did something with an intention to do, that may come. Maybe I don't know whether cyber attack will come into this picture. I have not thought through, to be frank and honest. Correct. Tampering means why will somebody will tamper?
No, this is not internal, external.
Yeah, internal, external.
So I think as far as what the minimum understanding, if there is a cyber attack and if it's directly linked to auditor, then it has to be reported or it has to be qualified.
Yeah. No, but there again, if suppose they have a proper backup or what to say mechanism, in case of flood or something, they have an alternative mechanism very well available. It's very difficult to give that practically, but suppose there are systems which are there, they have alternate systems to capture everything on a day-to-day basis. You have a, say, BS process or whatever they say, even in a case of so there are companies who have a good process, even in case of a flood or even something happens like this. So BCP process or something, then I think they might come up and say, I have maintained. Only thing it could be that they record it late, but still they will have everything backed up.
Yeah.
I might record it 10 days later, the entry. But I will have everything approved or I will keep it manual. So I think it's very judgmental. Okay. See, they feel that audit trail is when somebody doesn't record also, whether if they even record it late, they have a reason for it. Some proper approval has happened, it is backed up by proper evidences. Somebody has properly approved, everything happens. Though instead of 10th, I record the entry on 20th. From 1st to 20th. Instead of saying daily basis, I record online. I do it little backdated or something. But I do it with every backup and everything available with all things happening. Base document is available or whatever. So then I will not qualify. Correct. But it is very difficult to prove in that case where cyber attack happens to keep the audit trail. That is a practical challenge.
Because these cases, situation to situation, need to be evaluated case to case basis, and then the judgment need to be applied. Yeah.
Genuinity has to be established.
Yes, 100%.
Because somebody should not take cyber attack as a root, as a leading to a surpass this particular provision.
Then the preservation of by the company as per the statutory requirements, again if it has not been preserved within the statutory period, then that is the qualification which is the long wage. And migration from one software to other happened during the year or higher version software installed, and then the auditor is unable to obtain sufficient appropriate audit evidence, where they may take the higher version may take some settling time, teething issues will be there. So if those things are there, if the statement of fact that the company has migrated and is in the process of establishing necessary controls and documentation regarding audit trail. Consequently, we are unable to comment. So that is the again disclaimer from an audit perspective. Next. Again, this is special consideration in the case of fraud scenarios. This is an extreme scenario. I don't think so. I mean, there is specifically, it has been called out whether the reporting requirement, it is quarterly, yearly. At this point of time, again, it is restricted to yearly. Again, like any other thing, the likelihood that deficiency will result in a material misstatement, and then magnitude of such an outcome again need to be evaluated on case basis, and then it has to be qualitative, quantitative, and then the related requirements need to be complied with. Next. So some frequently asked question, we have covered all those things, but still matter of if the creation of user accounting, adding new journal entry, changing an existing journal entry considered as a change made to books of account. Yes, creation of a user in the accounting software may be construed as a transaction in the software, but would not change the records of books of account. It is not considered to be a modification to the existing. If the sales record in a standalone software and only consolidated entries are being recorded into software used to maintain the GL, should sales software be considered? Yes, sales software, because underlying transactions are happening in the standalone, the subledger or the standalone system where the sales are being managed. So that related, be it be sales, vendor, payroll, any area which is being acted as a subledger standalone system, which is again finally being incorporated in the final books of accounts, those things need to be scoped in. Then is the reporting under this applicable to all class of companies? Yes, it is. Again, Section 8 companies also being covered. There is no thresholds, unlike ICO-FR and other things, no exemptions have been given. So only exemption is that manual maintenance of records. I don't think so anyone in this world will go back to manual for not complying this thing.
Shiva, one more question on, you're talking more on sales now. How about the banking side?
Yes.
How about you have LMS?
Yes, that also need to be.
Ledger.
Yes.
Then your accounts, then off-balance sheet items. Will all that be done? Or because there are, and then there is DO, direct origination systems. Now you got.
By mandate, by law itself.
No, that is sorry to be very, again, I can't take it online. That's an assumption, okay? That's a big assumption that all audit trails exist. It's a big assumption. So I don't want to make public statements, but there are serious problems in the system. This audit trail for banks, or I think I have enough bankers out here, they can vouch for it. It's a very, very difficult provision. For manufacturing, we're talking more on manufacturing, but for banks, this is going to be a big, big challenge, especially. You have software, they have multiple software, multiple interfaces. How are we going to track all this is going to be a story by itself.
Since we are talking about cybersecurity, banking, robust systems, I'm just having one perspective which I can throw to the forum. So every company is having one or other cybersecurity tool. There's some IS team which is working on reviewing logs. So I think most of us would have worked with companies having SOC teams, Securities Operation Centers. So now SIEM tools are actually integrating all critical application logs, and they are monitoring these logs on a real-time basis. So can this be included as part of the audit trail, where we can have a system, instead of building another system for audit trail, which is going to capture all the changes in different applications, since we already have something which is managing logs, can we do archival and retrieving data and changes from the same system? So this is a consolidated, instead of having, let's say I have 10 applications constituting my books of accounts, I can have one system which is consolidating the logs of all the 10 systems.
Okay. I'll leave it to the audience, then I'll have my view on that. Anybody? The question, good question. CM tools or SOC tools. We have so much logs, they interpret, they throw out exceptions. Will that be constituted as part of typical audit trails? Yeah.
Need to understand in terms of the completeness of the interfaces.
Right. Yes.
A. So does it take completeness of all the transactions so that I can place a reliance on that? So that has to be, so the design of that has to be evaluated. Then, basis my design effectiveness, if I conclude that yes, I get a complete and accurate view of all the logs, then the reliance can be used.
Yeah.
But will this fall under audit trail? See, our question is cyber security tools, which are tracking all those records, track all interfaces, track all access controls, just an example. Will that fall under audit trail? Shiva, you have to come at the end, okay? You are the expert here.
Can be deemed as audit trail because ultimately it is all kind of finding a place in my financial statements.
No, but that's the tool captures every edit which is happening in all transactions. And
see, that's what I said.
That is actually a big judgment.
No, there are two aspects. So one is accounting. We are saying accounting software. This is an accounting software, one question. Okay, if it has indirect or direct impact on the financials, how do we interpret? And thirdly, since you specifically call out cyber security tools, so the tools, I will add one more, audit tools, okay? Will audit tools fall under this audit trail concept? Because I think that's the biggest story now. What is the audit tool used by financial institutions? So most of the challenges are coming around audit tools, their trails, how do you document, how can you retrieve? And most of us on NFRA side or SEBI side, we are having a lot of excellent documentation, which is also becoming a challenge for us. But what's the story? Audit tools, will it fall under audit trails?
We'll go back to the definition of the accounting software, sir. It says ecosystem. So, an ecosystem can be from any system which has a direct or indirect bearing into my books of accounts. Would be deemed as the relevant ecosystem. So, the way they have put the definition is quite vast and huge.
Secondly, the books of account definition, if you see, it talks about the money coming, going, and then they are talking about all transactions relating to balance sheet, they are talking about all transactions relating to any expenditure, income, and then finally they have covered that cost records also. If I take that, and then that is an inclusive definition. If I take all these things plus it is an inclusive, anybody can interpret saying that anything and everything I can connect to the books of account, because ultimately everything comes to the financial transactions. So,
when the external auditor has to audit also not only the financial systems, also the operational systems, right? So you will be getting involved in operational audit as well.
if you believe, if that is again connected and then interpreted to say that it is connected, having some bearing on the financial, very difficult. Scope will be not more, scope will be difficult, impossible.
But I think that is the case, no, sir. Every operational aspect is going to have a financial impact. Otherwise, why the company is going to invest in an operational activity if it's not going to have a financial impact on them?
See, probably you will not go to the extent of doing an operational audit, but we will scope in to an extent that the operations that is relevant in terms of getting into my books.
Yeah,
so
let's say
coming operational audit, but in my design effectiveness, I have to ensure in terms of the operational systems which has a bearing into my business.
Yes. So let's come to manufacturing itself. One example I will close. Let's say the company is having a packing system or a labeling system. Is it a financial impacting transaction? It is a major financial impacting transaction because my FG code should tally. I don't know the cost of goods sold if my FG is not right. And if I want to validate the FG which is manually entered in the production module, my only audit aspect is labeling or barcoding system. So even that should have audit trail. Otherwise we cannot...
taking...
I just have one question. How many companies have you seen work in progress coming out on ER? I'm just asking a very simple question. I do some bit of audit.
So only we are getting factory seconds at very cheap rate.
No, but my issue is work in progress is always opening balance, closing balance, minus and backup, right? So why are, that's work in progress, if this audit trail is going to be dragged into it, I didn't talk about, since you guys are talking about inventory, packing and all, I don't think it's going to be an easy solution because normally working process is a derived figure.
Correct, sir.
I don't know, I might be
FG
wrong.
itself is a derived figure, sir.
No, FG, you have a problem, right? You have to do physical verification. That is NFRA 1. Again, something has come yesterday also. Why I put that point? If I have an R2R or a P2P, which is record report or procure to pay or sales ledgers, that's all I will still. I'm asking some of the audit committees who've been asking me, I'm saying just stick to it. If you're going to go beyond into some of these areas or cryptic tools and all that, you will have I think it might come somewhere down the line, but that's my interpretation. I'll leave it to think. I'm sorry, guys.
No, there are subjectivities involved in WAP valuation, so many other things.
Cost
That's
of
why.
goods sold, everything.
Yeah.
But where,
Coming to that soft, but what I personally feel is like, there is like one code which you mentioned will accumulate for so many shop reports every one audit. But at the end of the day, if you see the definition per se audit trial, what it says is you have to trace back to the original source. So at the end of the day, that particular audit rule, again taking into account this, the change that is impacting the financial statements, if you're able to trace back to the source input, I think that should work.
So it will be like SIM providers can give us a modified solution, sir.
No, I'm not getting, I don't know, R2R only I'm struggling. That is record report. That's financial reporting because half the balance sheets, if you see, is Excel driven. Okay, sorry to be talking about, right? So most of this is the reality, Deepika, you are an expert on Excel, so you'll manage. I'm always believe in Shiva side, Excel means I get very frightened.
Yes, sir, Excel is a frightening tool.
So most balance sheets, reconciliations, everything seems to be in Excel today, which okay, helps Bill Gates quite a bit, but we have to move out of that. But my worry is, she says, trail to the base transaction, which may be the interpretation here. I just have to.
But I think logging tool will be mandatory, sir, because each application it is very difficult to actually go back.
You put a point, logging, how heavy will the log?
The log will be more heavier and better than the audit trail, which let's say Tally or SAP itself. It is showing only that particular field edit, right? We are not able to trace particular transaction from a balance sheet or P&L level, to the edit log. It is only the transaction edit log that is available. It is our duty to go and search back how many times it was edited, how this number is arrived.
So we'll keep this offline. I'll have
Yes, sir.
So the logs are most difficult. Which logs to switch on, which logs not to switch on. Somebody can define. I'll be happy to sit there for the next 3 hours and learn it. So there are some questions when I put it on my report. Shiva comes back to me, tell me which log Ravi I should switch on. And this is very difficult because there are 10,000 different type of transactions.
So if we enable logs in any system, it will capture everything. Like for example, in your system, laptop, there is something called as event log. You go to the event log, in Windows type event log, put enable event log. What it will do is, it will record which Excel you opened, which cell you moved to, okay, which photo you opened, which you minimized, which you cropped. It captures everything. So Excel is not required to have audit trail. In your laptop, if you enable audit event log, it will log every event in your computer. So logs are more comprehensive.
So more you audit trail, right? More you're opening up to inspection, right? So be careful on that side.
Your space saving, spending on your space.
Yes.
And all that.
Can understand, sir, in terms of, we may look for in terms of an automated log, but despite that doesn't rule off us from our responsibility in terms of giving an opinion on the financials. Probably how I would rather put it out is, yes, if there are automated logs, can I place a reliance on that based on my design effectiveness? Otherwise, I try to see in terms of if I have an alternative control, which is like ensuring a data quality management framework. In terms of, it can be as good as in terms of certain manual reconciliations to ensure in terms of the data from the source to my target systems are complete, accurate, and probably I can take it to the next level in terms of whether I have got a strong substantiation for my transactions.
Yeah.
Probably these can also indicate in terms of A, whether the audit trail is sufficient, adequate for the operations that we are auditing.
Yeah. Okay, so the next is that how long the audit trail, we have discussed enough period of 8 years. Then reporting requirement in case where the books of accounts are entirely being maintained manually, it is not applicable. Then reporting requirement in case of accounting software support is being provided by service provider, again we have discussed, this has been again required to be complied with. So through SOC 2 and then SAE 3402 reports. So these are the some of the FAQs which we could able to gather from the implementation guide and other sources. So then the last slide is the template of the log, how it has to be tracked, ERP name, ERP brief, financial information, books of account, primary. Here is the place where all your judgments required to be appropriately been articulated, documented, linked to your overall IT landscape, and then demonstrated to any external auditors, everyone. And then tomorrow any inspection comes, these are the base records basis which the entire this compliance can be monitored. So the last, before I conclude on this session is that if you incorporate some of these aspects in the internal audits, I think some of the discussion happening with the internal audit teams, where the internal audits will take responsibility for some of these things upfront, and then they verify and then come back to the board audit committees and then give the factual representation of what is required, what is happening, then that gives idea about how this has been required to be managed and then how it has been managed and then what will be the far-fetched implications, be it cost, complaints, and then the reporting requirements at the end of the period and then the year. So with that, our session on...
I have one more question. You said internal auditor. What is management role?
Yeah, management, first itself we spoke about the management responsibility. It talks about the controls, it talks about the various, the records that need to be maintained. Before, I think, internal auditor, the management should have appropriate policies, guidelines, underlying framework, basis which this entire thing need to be incorporated.
So does this become like a concurrent audit feature, like your related party books, your audit trail becomes a concurrent feature?
Yes, till such time it settles down and then entire thing, it has to be done on a concurrent basis. But initial first year, it will be painful year. Then once it is established, everyone understood this provision very clearly, how regulators comes back, how things are happening, then I think this maturity will come and then obviously there will be a lot of clarity on these aspects.
You mentioned there is a role to be played by the internal auditors. Can you elaborate on that? To what extent, in what detail, what kind of role he has to play, internal auditor, and whether it's be helping the management so that they can submit to the statutory auditor so that proper reporting can be given. Can you expand, elaborate on the role of internal auditor?
Yeah, so basically, correct. So being an internal auditor role, again, a discussion should happen between the management and the internal auditors regarding the requirements of the law. And then once the requirements of the law has been established, normally statutory auditors will review the scope of the internal auditors, because in the CARO and then their reporting, consideration of internal audit reports is very, very critical and important. So as statutory auditors, the scope of internal auditor need to be reviewed. Second is that management should upfront have discussion with the internal auditor to make sure that these things have been scoped in, the law of compliance and then cost, all the other things. And then the internal auditor can specifically come back at the early stages about how this is required to be implemented and then what is the effectiveness of the various policies, guidelines, framework which is there, which is required to be there. The gap assessment need to be done upfront because it is already 1 quarter is over. So it is important that at least before 30th September, if the internal auditors come back with a clear-cut gap assessment of what is required by law and then what actually has been done, that will facilitate the audit committees, board, management to see where they stand, what are the long-term actions, steps which are required to be done, and then accordingly they give comfort to the statutory auditors, external regulatory people about what is being complied with. So,
similar to ICOCON,
yes.
internal auditor is helping a lot
Correct.
to management.
Correct.
Here also, internal auditor has to help a lot.
Yes.
His role is very critical and important.
Very, very critical and important.
And one more thing, internal auditor should take the help of system auditor and system expert.
Obviously.
Because The internal auditor might not have the capability also in various cases. So.
Yes. Yes.
No, not on all cases. In a lot of companies, the system audit is done by an external person also. So they have to coordinate among themselves to get it.
Competency always should be there. So otherwise, then the whole purpose, it will not serve. So 100%, I think that need to be evaluated and then.
If the in-house internal auditor does not have the competency,
then they have to
be outsourced. That's all.
Yeah.
Consultant will do the job.
Correct.
So any other questions?
Any questions, anything, would be happy to take, and then I am happy to see so many questions, and then actually it enhanced my knowledge level also. And then thanks to all of you for your interactive session. Very lively, and then I thoroughly enjoyed the session. Thank you so much for this opportunity, and then it is certainly, I think it is helpful. It is important as professionals we come together, discuss, deliberate. These are all the healthy discussions we need to have on periodical basis. At the end of the day, we should not sling mud on each other, be it regulator, professionals, we are all peers at the end of the day. And then it is important that we as professionals, we should carry all these compliance requirements. And in case if there are practical difficulties, challenges, we should go back to the regulator and then tell and then get the required clarifications upfront than reporting and then fighting with each other. So
I can say one thing.
Yeah.
The guidance note given by the Institute of Chartered Accountants of India is very, very limited, very brief. It does not cover so many aspects that you have covered.
Yeah.
Hats off to you, sir.
No, thank you so much. Thank you. I think I learned a lot from your discussions also.
So thanks once again, Shiva, and thanks for all the members for staying late. And any more questions? This is getting recorded, and so we will have it on the website shortly. And any questions offline, if Shiva has got some time, he can spend now, or we can just reach out to us. We will pass the question.
Thank you.
Thanks once again, Shiva. And
thank you so much.
Sir, a small token of appreciation.
Oh, thank you.
You for spending time with us.
Thank you so much. Thank you.
Sir,
final vote of thanks, sir.
I am the least eligible person to offer some small lecture at the end of this session, so I cannot do justice. But I can say one thing, that even after listening for about 10-15 minutes, I could very well understand how elaborately he would have covered all these aspects. That's why I thought that I should say, compare between the guidance note given by our institute and whatever has been covered here. Excellent. Give him a very big hand, please. Thank you all for effective participation and making it a very interactive session. Thank you very much.
those who are not IA members, kindly welcome to become members.
Kindly become members of the Institute of Internal Auditor. When you become the member of the institute, you become member of the IAA Global automatically. The membership ID is given by the IEA Global. Only thing is you choose which chapter you want to belong, Madras or Bombay or something like that. So you are becoming international member of the international body, and it is very, very, very nominal, just 4,000 rupees per annum, 4,000 INR per annum subscription, and first year 1,500 entrance fee. Later on it's only 4,000 plus 720 GST. So it's very nominal, and you get lot of information, lot of material, and we conduct every month PDMs, professional development meeting, which is free of cost, and so many other seminars and conferences. Member rates are cheaper, non-member rates are higher, so that's advantage. One more big advantage is that the Institute of Internal Auditor Global has got an excellent website. In that, lot of materials are available for reference for the practicing internal auditor. If you are a member, it will allow you with your password to certain specified areas, which has got lot of study material. So that is the greatest advantage. So I request those who have not become member as soon as possible. Thank you very much.
Thank you, sir.